Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 30th of May. Starting with the FTSE, where one wonders what would have happened if we hadn't had a general election call. Maybe there was one in the autumn rather than in July, because obviously that's pulled the rug from under the FTSE. You're down from 84.70 down to below 8,200 at one point today, about 81.48. We were fearing that we might have to test that old April resistance area at 8,200 as new support, and obviously we've overlapped that. The other risk that we have still is that we have to have a meeting with the 50-day moving average at 8,100, and maybe even to go as low as 80.80, just below that, and the old April support or consolidation area that there was behind that particular move. On the upside, there is a line of resistance for aggressive traders around 82.40, so end of day close above that might signal to them that the worst is over. Also, obviously, we bounced off that rising February trend channel nominally with its floor at 81.50, and that may be also taken as a positive. On the negative side, we've broken that uptrend line in the RSI window at around the neutral 50 level, and so really probably the safest thing is to wait for a revival of the RSI above the 50 level before assuming that the worst is over on the sell-off. Moving on to the DAX, and here you can see that we're still struggling with the old resistance area from March, April, 18,500. We were fearing that we would have to test the floor of the rising trend channel from back in the autumn. That's also level currently with the 50-day moving average around 18,200, 18,300. That looks as though it will come to pass. In terms of the upside, we want to see an end-of-day close back above 18,500 to then put us back on the journey for a top of September trend channel target as high as 19,500 by the end of next month. Worst case, I suppose, is we have to head back down to the March-April support area, 17,700, but not expecting that at this stage, especially with the RSI on the right side of 50. The Dow is next, and here we're looking for, I suppose, as we are with the FTSE and DAX, signs of support coming in. At the moment, not looking great in the sense that the fear that we would have to fill that gap down to 38,300 has basically come to pass, and then we've got April-May support there, 37,600. So that is potentially on the way while we have no end-of-day close back above the 50-day moving average, 38,900. Obviously, the aftermath of the double top there, not a great one for the Dow. Moving on to Bitcoin, and here it's been consolidation most of the time in the recent past, and that's still the case, consolidating above the floor of that rising trend channel from October and the 50-day moving average at 65,000. At least while we're above that, they're looking for a move towards the 74,000 area, the record high from back in March. Overall picture to cheer people up is up to 90,000 at the top of that rising trend channel, but I suppose that is a 2 to 3 month view now, given how slow the price action has now become. RSI still on the right side of neutral 50, which is a bonus. Onto gold, and here the market trying to adjust itself, but doing so quite well in the sense that we found support above the 50-day line. That's currently around 23.34. Above that, looking for a retest of the best levels towards 24.50 plus over the next couple of weeks. Ultimately, by the end of next month, still looking for a 25.50 plus target at the top of that rising trend channel from December. And good to see the RSI just clinging on to the RSI 50 level, which is a plus point. Next up are the stocks, and starting with Aminex, which on the quiet has been able to rehabilitate itself of late. Here you can see that we've got this progression within a rising trend channel from back in December, and the shares not too far away now from our price channel top target at 2.2 pence, which we're looking for over the next week or so. Ideally, we stay on the right side of 1.8 ahead of that 2.2 pence target. If you are a fan of the shares looking for greater glory, we will update the target there, and that's probably along the lines of what I'm drawing there, so towards the 2.5 area, but let's see if we can get through the top of that channel first. Next up is critical metals, which seems to be going from strength to strength after the recent interview that I did with Russell Fryer, which was nice. Here you can see that we've hit our first target there, 6.7 pence, and we're looking for 10 pence by the end of next month, which at the moment looks as though we can be fully achieved. Only back below the 6 pence level, really resistance on the way down, delaying the prospect of a lasting turnaround, especially given the way that the 50-day line is now rising well. On to another potential recovery situation. Here we've got ECR, which has bounced off the floor of that rising trend channel from September. The level there around 0.26. The longer we stay above that, the greater the chance of 0.44 pence, hopefully by the end of next month. But obviously we'd like to see decent end of the day closes above the 50-day line, currently at 0.29. So a few more of those and maybe a weekly close would do the trick. RSI is already pushed above neutral 50, which is a bonus, as is the way that we're back above the 200-day moving average. Next up is a stock which is going from strength to strength at the moment, and the only question here is how far will it stretch? Golden Metal Resources, top of the channel there, heading for up to 23 pence, which we're assuming will happen by the end of next month, and the upside valid certainly while we're above the 16.5 pence area, which was February resistance for the shares, and is also basically the floor of that rising trend channel from September. Moving on to Genflow, and here Grant news today has done the trick. In fact, the share is already gapping up ahead of today's news, and we're looking for the next target there up to 3.8 pence or 3.9 pence by the end of next month, or even sooner. Obviously that ties in with the old June resistance, and hopefully after that, with this sort of saucer-shaped turnaround that we've got, we'll see much more than the 3 to 4 pence area, maybe 5 to 6 pence plus. Only back below the gap there, around 2.2 pence, really delaying the upside scenario. On to Graft Polymer, which seems to be rising like recovering like Powerhouse Energy did some weeks ago. We've got this, what I call a V-shaped bull flag, so a rally and then a pullback, and then breaking that peak there. That was around the 0.54 level, and end of day close about 0.54 could take us up to 0.9 pence by the end of next month, or even sooner than that. So looking pretty healthy there. Only back below 0.3 pence today's support area, and yesterday's as well, really delaying the upside scenario, but with that rising 50-day line now looking very healthy indeed. And also we would like to see this stock close above 0.52, which is the top of that gap down from March. Moving on to Katoro, which we've been following quite quite keenly over the recent past. Katoro here breaking out towards our target there, 0.16, which is obviously the top of the range as well, and January resistance. That leaves us looking for a fresh target there, up to 0.22 by the end of next month, while we remain above the 0.12 area. Very pleased to see Kodal hit the target that we had previously at 0.62. What we'd like now is an end of day close above 0.62 to give us as high as 0.78. Upside value while we hold above the old March resistance of 0.52. So I think that's the line in the sand there for the bulls. And as I said, the trigger for a new leg high up, an end of day close above 0.62. Moving on to a stock which has really done us proud. I think I was discussing the pros and cons of having a spread bet in, placing a spread bet in core potash a couple of weeks ago on the weekend markets. I think when they went around 0.8, and obviously you would have basically tripled your money on that, and tax-free too. So very interesting. Current situation is that we're looking for that steep line of resistance from back in 2021. That's heading for 3.8, 3.9 pence, and looking for that by the end of next month, while we remain above the old target there, 1.9, which is also basically 3-year resistance for the shares, or former resistance for the shares. So above 1.9 up to 3.9 on core potash. For just the first signs that Metals 1 is turning around. Looks like we've got a triangle base here, and also we have made a lower low for the end of May, but higher RSI trade, so there is a bit of bullish divergence in that sense. If you're cautious, probably want to see an end of day close back above the old April support there, 1.05, and then that would potentially open up the idea of 1.7 pence in the 1 to 2 months after that, but early days yet on that situation. On to Nexus infrastructure, and here you can see a V-shaped turnaround above the 200-day moving average of 91 pence, gapped up today as well, so we like those. And end of day close above the February resistance around 98 pence is enough to give us the potential of a move to the top of that triangle from August as high as £1.40 by the end of next month. But the key here, staying above either the 200-day line if you're happy with that kind of money management, or an end of day close back below the floor of the gap at 96 pence. Petro is next, and here you can see that we've basically broken out of the recent range around 4.5 pence. Above that on an end of day close basis, we are looking for greater glories, which add up to basically the top of the range, which obviously was around 7 pence from back in this time last year, and also that resistance line projection from December 2022, just under 7 pence as well. But the key here, holding above 4.5 to give us 6.8 to 7 pence on Petro. If gold metal's doing well, then one would assume that power metal will do well as well. And here you can see the shares actually gapped up earlier in the week, filled the gaps as a gap fill buy signal, and looking for the top of the triangle there from back in March as high as 17.5 pence over the next couple of weeks. The good news here, I suppose, as well, is that we've got the 50 and 200-day moving averages both rising, which suggests that we're not far off from a golden cross, maybe a week or two away. And traditionally, the golden cross is the strongest part of the cycle. Next situation is Quadrise, and here also shaping up quite nicely. Also going into a golden cross, so maybe a week or two away with the 50 and 200-day lines both rising, and looking for a retest of December resistance 3.2, 3.3 pence over the next week or two. If you look closely, you can see that we gapped up today as well, which is it's a second gap higher this week, so pretty impressive stuff. So really looking for that 3.3, 3.4 pence areas being the minimum on the upside on Quadrise. Very strong setup there. Only back below April resistance 1.8 pence, really delaying the upside scenario. Moving on to Rainbow, which is finally moving as well. Here you can see that we fell out of our rising trend channels from before, but current situation with a higher low versus April, and we've also got a line of resistance to beat around 12 pence, which is now the initial target, and above the 10 pence area, looking for that, and maybe up to the 200-day line at 13 pence by the end of next month. Stock which I don't normally cover is coming up next, TPX Impact, and here, if you look at the bigger picture, we've got a rising trend channel which has been in place since the end of 2022, top of the range there at 60 pence, and we're looking for that while we remain above the 50-day moving average at 33 pence after our gap higher that we had today. Finishing up with Wildcat, which is edging up off its lows. Interesting that we've now broken the 50-day moving average for the first time in nearly 2 months. The 50-day line there at 0.18, and above that on an end-of-day close basis, looking for 0.25 by the end of next month or even sooner. That's it for me today. More updates tomorrow.